If you're going to say, well, how can I go about living the richest life possible? The way to live the richest life possible is to make dollars, to earn dollars, get them in your bank account, and spend them in some other foreign country, Thailand, Mexico, wherever it's going to be, because you're going to live like a king, The only place that you can't live like a king on dollars is in the United States. The only real solution is to go back to a gold standard of the sort that we had in the 1890s, really. But I don't know how to get from here to there. I mean, if somebody put me in charge, I'm sure I'd mess it up.
The dollar's status as the global reserve currency was solidified after World War II through the 1944 Bretton Woods Conference, where 44 nations established the IMF and the World Bank. However, the U.S. trade deficit persisted over time, driven by global demand for dollar reserves. This demand has allowed the U.S. to issue bonds at lower interest rates, helping to sustain its growing external debt. Amid fiscal challenges and short-term policymaking, central banks worldwide have been shifting away from U.S. dollar reserves in favor of gold. In January, global central banks collectively purchased 18 tons of gold, with emerging economies leading the acquisitions. While developed nations like the U.S., Germany, France, and Italy have long held substantial gold reserves, emerging market central banks are now the primary net buyers. Jeffrey Tucker, journalist and founder of the Brownstone Institute, highlighted the disparity in the dollar's purchasing power, noting that earning dollars in the U.S. but spending them in countries with favorable exchange rates, such as Thailand or Mexico, allows for a higher standard of living. Looking at history, Tucker argued that global trade operated more efficiently when all currencies were different forms of gold and silver. He believes the only proper solution to the ongoing monetary instability is a return to a gold standard similar to the 1890s. We're about to explore the video. But first, subscribe and hit the bell icon to keep up with our newest uploads. Your feedback in the comments is always appreciated.
What the Trump administration seems to be doing is trying to lower the exchange rate value of the dollar relative to other currencies. So there's two things operating here. If you read the paper by the new chairman of the Council of Economic Advisors, he's a Harvard economist, and his paper that he wrote before going to work for the Trump administration on this whole subject is really, really good. And he talks about the absence of clearing and the wage differentials, especially between the U.S. and other countries, and how we can't win the struggle. So what he wants to do is use tariffs to serve as a proxy for clearing. So if we make imports vastly more expensive, then we're going to get more of on a competitive playing field. We'll reduce the trade deficit that way. So I read this article, and it seems really speculative. Like it's the sort of thing that works on paper. Means of achieving the same thing would be to reduce the international value of the dollar relative to other countries. Like in the trade-weighted value of the dollar, it's got to be more or less the same as the euro and the yen and the yuan. That's the only way. Because it's been overvalued for a very, very long time. Since the end of the gold standard, it's just been obviously wildly overvalued. So we've got to reduce that value. It's interesting because for Trump's part, he sees the dollar as the dominant currency in the world as a position of strength. At the same time, he's trying to bring back American industry. Okay, those are incompatible. It's just math. You can't have both. Again, this is why I don't like to talk about the subject. It's extremely important to distinguish two ways in which we talk about valuation, and they have essentially nothing to do with each other. So if I have a dollar, there's three things I can do with it. I can buy goods, I can buy services, or I can buy other currencies, right? So when I talk about reducing the value of the dollar internationally, I'm not talking about domestic goods and services. I'm talking about the value of the dollar relative to other currencies when you're in the currency market. You see the difference? So we've experienced like a 25% inflation over the last 4 years. At that very time, the value of the dollar on international exchange has gone up. So down domestically, up internationally. Those are really, really different things. So the dollar's never been, except in the last 2 weeks, never been as highly valued internationally, but it's never been as low valuation domestically. So it depends on what you're buying the dollars with. You can buy a lot of foreign currencies with a dollar, but not that many eggs. If you're going to say, well, how can I go about living the richest life possible? The way to live the richest life possible is to make dollars, to earn dollars, get them in your bank account, and spend them in some other foreign country, Thailand, Mexico, wherever it's going to be, because you're going to live like a king, The only place that you can't live like a king on dollars is in the United States. For hundreds and hundreds of years, all currencies in all trading nations were different names for the same thing. Ultimately, we were all trading gold, silver, or whatever, mostly gold and silver, right? And some other commodity money. And that was, the real money for the world was rooted in something physical. To this thing is to restore a world where everybody in the world uses the same currency. How do we, which is to say gold, right? How do we get from here to there? Avoid this have not worked. So in 1985, James Baker, the Secretary of the Treasury, tried to do what was called the Plaza Accords. And the Plaza Accords were going to fix exchange rates all over the world so that there would be a fixed relationship between the dollar and the yen and the this and the that, and everybody would adhere to it. But that broke down in like 2 seconds down because the U.S. was shipping out too much gold. And we're like, oh, this is not working. And because the U.S. never allowed prices to adjust downwards, inflating everything all the time, the settlement broke there too. So it's, and so that broke. So the only real solution is to go back to a gold standard of the sort that we had in the 1890s, really. But I don't know how to get from here to there. I mean, if somebody put me in charge, I'm sure I'd mess it up.
The gold market is being driven by the tariff policies of the Trump administration, which threaten U.S. economic growth and the dollar's global standing. Ongoing tariffs could weaken the economy, diminish confidence in U.S. dollar reserves, and erode trust in the administration's credibility. Additionally, fiscal challenges and short-term policymaking have led central banks worldwide to reduce their dollar reserves and increase gold holdings. As America First policies heighten uncertainty in global finance and the economy, they are likely to fuel gold's rising value further. Could the recent financial situation force the U.S. to return to some form of a gold standard? Join the conversation. Share your thoughts in the comments, give us a thumbs up if you found value in this video, and subscribe to stay engaged with our community.